Okay, what's going on, everybody? Welcome back to the channel. So it has been a very interesting week in the markets, to say the least. We hit all-time highs, I believe, on every single index here, at least here in the States. The SPY hit all-time highs yesterday, kind of pulled back today, but we also had all-time highs on the NASDAQ. And what I find most interesting about this, right, is this whole melt-up in the markets is that the worse the economy gets, the higher, the real economy, the jobs market, the housing bubble, the stimulus, the money printing, the worse this stuff gets, the higher and higher the stock market goes. And I think we will continue to see this sort of bullish momentum in the stock market for a while. I think some people call it a melt up. I think we are going to see that. Could it pull back and completely collapse in the next month or two? Well, if any of this was based on fundamentals, that would be exactly what happens, right? If the stock market actually reflected what's really going on out here, that would happen. But the stock market, we know, is just completely, it's on fire, delusionally on fire. And this is why I like to keep a cash position, close out cash, every single day in trade right now, because at these high valuations, I don't feel like it's a good idea for me to take the little bit of money I have and put it into long-term positions. What else do we have going on here? We have oil hitting a 1-year high. As Peter Schiff says, the road to $100 a barrel, it's going to be quick, right? Possibly. It could go from 50, which I think crude right now is at 57, right? So we're almost up to 60. The road to 100, it's probably going to be very, very quick, right? This is what Schiff and other market analysts have said. I remember when oil was $100 a barrel back during the Bush administration. And so higher oil prices, it's going to be good for stocks like Chevron, right? CVX. It'll be good for stocks like ExxonMobil. ExxonMobil's on fire as well. Could be sort of double topping here. I think it could come back and retest this $45 area. But, people that got into oil back in November, right, when it was like when ExxonMobil was $31 a share, these people definitely have seen a little bit of a payoff. And, we have the new green energy stuff coming in as well. Like, there's Tesla, right? Tesla's near its all-time highs. It's up there in the $800, $900 a share range. So a lot of people have made money in this as well. But, with what's going on in the economy, it is really amazing to see the stock market on fire the way it is, melting up, as some say, despite the fact that, damn near a million people every single week are losing their jobs. We had, I think it was like 775,000 jobless claims. And this is being spun as if it's a good thing, right? The way the financial media spins this is that, well, it's not 800,000, right? It's not 900,000. It was only 775,000. So this is good. We're making progress. And of course, these numbers, I think they're manipulated, right? We know the markets are manipulated. So why wouldn't they be manipulating the statistics and the financial information? Of course they are. The economic information, of course they are. And all this stuff that we saw with GME, right? From GME, its peak at 513. There were retail traders that bought into this psyop and bought at the top, and they are holding the bag right now if they haven't sold yet. Hopefully they have sold, because I don't know if GME will ever see those highs again. So this is like an eternal bag that you would be holding. But I think a lot of retail traders fell for this psyop. The hedge funds pumped and dumped this stock. And who did they dump on? They dumped on the retail trader. They dumped on the gullible and naive Robin Hood trader. This is exactly what happened. And the whole Wall Street bet crowd, we're being told that these are retail traders, but if you go and look at the quality of information that is being offered on some of these forums, it's obvious that insiders are in the Wall Street Bets crew, right? I mean, it's obvious to me. Can I prove that? No, I can't. But my belief is that hedge funds, Wall Street, banks, my opinion is they colluded to pump up GME. They colluded to pump up AMC. I think it's right, AMC Theaters. Yep, AMC. They colluded to pump up SLV. And who's holding the bag? The retail traders, right? So this whole idea that you can get rich quick, I think that is, for me personally, that's the quickest way to lose my money, is looking for the home runs, looking for these, unrealistic gains that, we really don't even deserve. It should be about the steady, slow growth. And if you want to put money into the stock market and buy some long positions, put some money into the SPY or into some of the stocks in the SPY, right? There's nothing wrong with that, right? So some people want to go the investing route. I myself am going more the trading route. I like to close out cash at the end of the day, at the end of the week, and just, live to trade another day. So that's what I'm doing. But, there are people that are investing in this market, and I truly do believe that these valuations are extremely high. There's another guy I watched, Jeremiah Babe. He basically says that we are going to pay a price for this stock market, for this rally that is just disconnected from reality, that this stock market this bull market, this rally across all the indexes, we're going to pay for this, and we're going to pay for it in the form of, a devaluing dollar, losing our purchasing power over time. And when this thing does come down, right, which it will, right, it came down most recently. When was that? At the end of January here. It came down real hard in September, and of course, you all remember the March crashes, which is not on this chart because it was so long ago. But if I go to this 3-week chart here, I think this, right here was the February-March crash. When this thing does come down, which it will, I think a lot of the social problems that we're seeing in this country are going to, the social and economic issues that we see, it's going to spill out onto the streets. This is another thing that Jeremiah Bibb says that, I agree with. It's like when people realize that their pensions are gone, that all the money they thought they had saved up in the market is just wiped out, and there are no exits for these people. What's going to happen? Well, what's going to happen is more civil unrest. So that's another reason I just want to stay out of the way, keep my cash position. This is the thing a lot of people don't realize, especially when it comes to stocks, is that cash is a position. It took me a very long time to realize that. But the feeling that I have right now, just sitting on cash in my account, right? Not worried about overnight risk, not worried about what's going to happen to my positions. I just have my cash. It's going to be ready to trade because I trade options, right? So everything's going to get settled by Monday and I'm going to be able to trade, right? I sleep really good. And sure, the stock market may go up a lot higher, right? And I'm going to try to profit by trading that. Like just today, I'll show you guys. Just today, I made like a 9% gain in the account, right? Over 9% I gained in my account. And it's a really good feeling. I'm actually up on the week. This time last week, I had like $930, I think. So I'm up almost $100 on the week. I did practice capital preservation, mental capital preservation, respecting my stop loss, all this kind of stuff. And so, I'm really happy with where I'm at. But let's go over a couple more of the commodities. We talked about crude at $57 a barrel. We have gold at $1,814. Gold actually dropped. I think it was below $1,800 for a few moments. Silver outperforming gold still. Silver still hovering around that $26 to $27 range, with premiums on physical silver much higher. So I don't know exactly what's going on here. I don't know if we're seeing a divergence where the actual physical silver is not going to reflect the price that paper silver says it should be. We know JP Morgan and the banks are adding paper silver. They're dumping, billions of ounces, I think, and trying to suppress the paper price. But when you go to actually buy the physical bullion, right now you're going to pay like $35 for a Buffalo round. So this is very interesting. We're being told that this is, inspired by the Reddit crowd, that the Reddit crowd, pumped up SLV, pumped up silver. But again, I just don't fall for that narrative. I think these are false narratives. I think the financial media does collude with, very powerful people. And if they want to transfer as much wealth as they possibly can from us to themselves. And so there's going to be all sorts of devious schemes that they, that they implement to do that. So same thing, with the GameStop. I mean, when I look at silver, when I look at SLV, I believe this whole thing was a psyop. I think there are retail traders that bought paper silver when it was $29 a share, and now they're holding the bag, right? This is how it goes, right? This is how it goes, and this is why it's so important to find your own leads, to find your own trades, to not follow signals. Don't get involved in signal chats or paying some other guy, $1,000 a year to tell you what stocks to pick. You really have to find your own methodology, and my methodology isn't perfect, but I'm developing my own methodology with finding stocks, right? I have my own watch list. I know what I'm looking for. I know why I'm taking these trades. And when it comes to physical silver and physical gold, I know why I'm holding those as well. So we all, as traders and investors, we got to get to a point where we have our own methodology and we're making our own decisions, because a lot of people out there are simply just following the herd. That is the quickest way to lose money. We also have copper at 3.6, up 2%. Soybeans down a little bit, down not quite 1%, a little over half a percent now. Lumber, I could talk about lumber and the rising lumber prices. I won't get into all of that as of right now, but that is what we're talking about here. We're being told the jobs market is sort of rebounding a little bit because they added like 49,000 jobs, but 725 or 775,000 people filed unemployment claims. So this is very, very serious stuff, guys. Very serious stuff. Let's see. If we go back to what was it here? Monday. I think this. This might have been. Nope, that was Monday. Let's go back to Friday real quick. Unless I didn't take a picture, I may not have taken a picture of my Friday P&L. But anyways, I was under $1,000. I was at like $900, and as you can see, this week I am closing over 1,000. And this was a 9% gain. You can see yesterday, I did take a couple losses this week, right? But yesterday I made an 8% gain. I took a couple of losses, and I even took, I think it was, let me see. Yeah, it was AMD. I lost real bad. Was just, not patient, really not waiting for the market to give me, confirmation or give me real signals. I was just kind of intuitively trading, and so on this day I kind of lost pretty bad because I took some bad trades on AMD. Today I did well. Like I said, I'm up 9%, but I do want to show you my losing trade, and then I'll show you my winning trade. My losing trade was on the SPY. So the SPY was at all-time highs, and we had sort of consolidated for a good 2 days, and then yesterday we really went way up, broke all-time highs in pre-market. And I really did think that we were going to extend that rally first thing at the open, and we did end up extending the rally and kind of consolidating this afternoon. I think we were at all-time highs, which on the SPY ETF, it's like $388.47. That is the all-time high right now. But I thought we were going to maybe extend this rally right at the open. And I guess I just wanted some price exposure to that in case we did. So what I did was, pretty much on this candle here, I got in on this 1 minute candle. I got in on calls, and I bought 3 calls. They were actually expiring today on Friday. And the stock did the exact opposite as to what I was hoping for, right? And that's not how I should trade. I shouldn't be hoping for the stock to do something. I really need to be waiting for proper confirmation and waiting, being a little bit more patient with this stuff. But I did let it ride down a little bit, tried to get back in up here to get my average cost down. So at this point, I had about 3 contracts. But as soon as it broke VWAP and then the moving average started to turn, we were also, at all-time highs or under them now. I was like, I got to cut this trade before it turns into even a bigger loss. So it was about a $50 loss. You can see right here, the first 389 call I got for 49. Then I got I got 2 of those. Yep. I got 2 of those to open at $49, and then I bought another one at $33, and then I had to sell all 3 of them for $27. So, not a crazy loss, but $50 down on the day at this point. And I didn't let it, hold me down. I didn't let it psychologically mess with me. I was like, I can do this, right? I still had plenty of money to trade with. So what did I do? I figured I was going to go to PayPal, because PayPal definitely was looking bearish this morning. We had all-time highs. I think that was yesterday, right? We hit 274, almost 275. And so PayPal kind of fell from those highs and kind of bounced around a little bit. We opened up under the pre-market highs, right? And immediately at the open, when I was trading the SPY, PayPal did drop. And so I'll show you exactly where I got in. The contracts here, I got in 3 contracts. One for 166. The second one I got in at 151, and the third one I got in for 145. This is another reason I really like to scale into position, because usually, my entries are not going to be perfect, right? I don't think any trader's entries are perfect. A lot of the times you're going to enter and you're going to immediately be down when you enter, right? Just because you got in a couple moments too early. But you can see this was at 9:59, 10:02, and 10:04. And then by 10:10, I had sold all 3 of them for $194 each. Right, so one of them was 166, the other one was 151, and the other one was 145, and I sold all of them for 194. All right, so not a bad profit. I'll show you exactly where I got in. So we had topping tails under VWAP, right? Topping tails under VWAP, failing to really break the previous pivot high. We had a supply zone above, which you can see it got rejected several times today. And so I decided to go short, right, to play the short side. I got in on these puts, and I sold at, what did I say, 10:10? Yeah, sold at 10:10. So I got in right here, between about 9:59 and 10:04, which was these topping tails. And I'm reading the 1 minute chart, by the way. And then by 10:10, which is right here, right, as soon as this big drop came, that's what I was waiting for. I went ahead and took profits. Could I have held it a little bit longer and maybe sold these for $250? Yes, I could have. But the thing is when you hold these too long, and I've really had to learn this the hard way, learn this by losing. When you hold these contracts too long, you end up giving the profits back. You end up having to sell for a loss when just 5 minutes earlier you could have sold for a nice profit. So I do not want to be a part of these pullbacks. As soon as we got this nice drop and I was deep in the money, deep in profit. I went ahead and sold. It did go lower, right? So I actually took another trade as well, which this I was kind of FOMOing, I'll admit, but I got in again for $222 and managed to sell at $245 on one contract, and that was somewhere like right here. Let me see. It was at 10.14 and then 10.15. Yeah, so that was a quick trade. Let me see here. 10.14. Yeah, so that would have been right about here on this green candle, and boom, as soon as we went red, I went ahead and took my profit. But you can see the stock did reverse, and we actually ended pretty much where we had opened, right? So kind of consolidating. Now, from far away, this doesn't look like a lot of volatility, but when you get in there, especially on these, PayPal contracts that, you could spend $100, $200, some of them are $1,000, depending on how much money you have to spend, there's enough volatility where you can, make a little bit of money. So that's my goal. That was my winning trade on those two trades. I made over $150. So you can see it says I'm up $93 on the day. I lost $50 on that first SPY trade, and then I made $143 on PayPal. So that's up $93 on the day. That's not taking into consideration the commissions, or not the commissions, but the options trading fee, which is about $1.10 per contract. 50 I pay, I think $55 to get in and $55 to get out, so it's about $1.10, and so it comes out to about $85 on the day, a 9% gain. At that point, I had to walk away because that was just with those kind of gains, those kind of percentage gains, you have to walk away. You have to respect it, right? Because you're technically outperforming the market at this point. And so I've learned that the hard way too. I've been up before 10, 15% and given it all back. And so it's about, slow and steady, really trying to just get my account up, get the process, get the methodology right, practice not only capital preservation, which I did very well this week. I did that very, very well. I really practiced capital preservation, respecting my stop loss, but also preserving the mental capital, right? The psychological, emotional, and mental capital. You have to preserve that shit, right? And after about a half an hour or an hour of this is very, very stressful, right? I will admit this is risky. This is stressful. I could lose it all. But preserving that mental capital, you just have to get up and walk away, whether you're up, whether you're down, go to the gym, do something else, and come back to trade another day. That's what it's about. Just surviving and living to trade another day. I do want to remind you guys, I have links in the description down below for both Robinhood and WeBull. If you fund an account, you'll actually, if you use the link, I think you get free stock. And then if you fund an account, you get free stock when you fund it as well. I will also get free stock. So we're kind of helping each other out. If you're interested in opening a basic brokerage account with either Robinhood or WeBull, feel free to use my links down below. Big shout out and thank you to the people who have. I'm getting a couple more stocks at the end of the month from WeBull, which is awesome. So I really appreciate it. I've got links in the description. Make sure to follow my Instagram at Marlo Cremidas. And I hope you guys have a fantastic rest of your weekend. As always, until next time, God bless.